This is the Investor Mindset Podcast.
Just looking around the room, there's a lot of young people and people who haven't invested in real estate. And I know you said you started buying single families. Looking back on that, would you recommend for people who haven't started to go that route or go the syndication route, pull their money, and go that route, maybe buy a multifamily right off the bat if they get 10 people in here or whatever? And if so, what steps do you recommend they take to get started in that?
So I think it goes back to what do I want and why do I want it, right? If your what is, I want to really understand what it takes to own a property, I want to manage that process, I want to be in control, I'm that person who needs to be in that position, then great, go buy a single family. Or maybe you're in a position where you don't have money to invest. Maybe you don't have 50 or 100,000 to be able to invest into a syndication. Then the direction you're going to want to take is to do a house hack or a BRRRR, where you're going to go and buy a property. You're going to use your local market knowledge to get into something. You're going to be able to win because of your relationships. You're going to be able to get somebody else to stake you or invest into you. Or maybe you have just a little bit of money to put down as a down payment and then get leverage and be that person.
Wanted to pause from today's conversation to share something that's been heavy on my mind as I'm talking with investor after investor, and I continuously hear this concern. It's the concern about inflation. We've seen some of the highest inflationary periods in the last 20 years, up 7.5%. Some believe inflation is actually closer to 20%. But what does that mean for you? Well, at the core, it means when money is sitting in your bank account or it's not in assets that are hedging against inflation, that you're actually losing buying power. So what does that mean? It means other things around us are getting more expensive, and the dollars that are sitting in your bank account are becoming less valuable. So what do you do about it? Well, one of the best hedges against inflation is investing in real assets, specifically real assets like multifamily. And why is multifamily so powerful for hedging against inflation? Well, we've put together a phenomenal 30-minute, purely educational webinar to be able to share with you why multifamily is such a powerful opportunity right now, why it makes sense to invest in a very hot market because inflation is so much hotter, and exactly how you can get involved. Now, if you're interested in learning more and educating yourself and potentially having the opportunity to get involved and actually hedge against inflation yourself, then I encourage you head over to investormindset.com/start. That's investormindset.com/start. And you can register for this 30-minute presentation that's going to be able to bring you through all of the reasons that you need to know and understand to avoid some of the biggest common pitfalls when it comes to investing, while also setting you up to invest to hedge against inflation through and through. Enjoy, and let's get back to the episode.
Now, if you don't have $100,000 and you don't have more than, say, $300,000 or $400,000 in total net worth, then syndication is not the right route because you should never invest all of your money into one place. In other words, if you're going to invest in one of these deals and you're going to put $50,000 in, I wouldn't want it to be more than 25 or even 10% of your total net worth because you'd want to be diversified. Now, have we lost money on any deal? Never. Except one time in a flip, and we paid our investors back what we projected. Because when you do 200 deals, you're going to have stuff that's going to fall through and things happen. But if you have money, you're earning $200,000, $300,000 a year, you're busy in your core business, your core focus, then I think syndication is the best route. Because unless your goal is to be an operator, in other words, to be that person who's finding deals, who's underwriting deals, who is putting together the financing and the investment, like the dollars, unless that's the role you want to be in, personally, I think you can make a better return investing in syndications with the right people because they've got that expertise, that knowledge. They're getting the deals in the markets that you're just not going to find them in. If you're trying to get out of investing in Denver, like you want to diversify into some other markets, then that's the best way because they'll bring in all of that expertise. And then the big thing that I didn't mention because I wanted to skip a couple of those slides, was that the passive investors usually get 60 to 80% of the profit most of the profit goes to the passive investor because they're putting up the money. And so the operator gets paid based on success, so there's an alignment of interest. So if you're an earner and you're a money maker and you're busy, passive investing, best route, wouldn't even screw around or go that other route. But if you're in a position where you don't have the money, or you're a person who wants to be in control, or you just find like it'll be a good hobby to know about, then the other route is a big advantage for sure. That's my take. But I definitely sampled both, and I don't want to own any single family homes ever again. You can't, the problem with single family and with smaller is that you can never be in a position where you can truly hire other people to be in charge of everything. Because even if you're owning a single family home or a duplex and you've got a property manager, well, when the hot water heater goes out, the property manager is going to call you and be like, hey, this happened, what do you want to do about it? Or they've got permission to do whatever on your behalf, but they don't care. The $400 or $500 or $1,000 to make something fix, to go and take care of something, is nothing, because they're making $60 a month, for a $1,000 a month project. It's pennies to them, but that'll go directly to your bottom line. So when you're owning those single family homes, you got to be the person who's really going to this is my baby, I care about it, I'm going to manage the numbers, all that stuff. And that's not me. So I hire smarter people than me to do that in our business, and therefore that's my preference is for sure the passive route.
Thank you for listening to the Investor Mindset Podcast. If you like what you heard, make sure to rate, review, subscribe, and share with a friend. Head over to theinvestormindset.com to join the Insider Club, where we share tools and strategies from the top investors and entrepreneurs on how to take it to the next level.